Where?
Switzerland,
Okay,
Croatia,
cool.
and Slovenia.
Wow. And I heard there's a heat wave and everything that's happening.
Yes, there's a flood in Switzerland, a heat wave in Croatia. But it's amazing. The view is wow.
I saw some videos that you're doing online as well. But that's nice. That's nice. Okay. Just shifted to my new home as well.
Yes,
I
congrats.
love the new. Thank you so much. I love the new environment. I'm a Eastie now. So for those Easties out there, love the hood. Stay as a Eastie. I was a Westie for 28 years of my life, and then I became a Eastie finally. Yeah. And these are just some exciting things that's happening in our life right now, right? But if you are here today, we want to thank you. You know why? Because we know that you are either invited by a close member or a member of JNA Real Estate, a friend of JNA Real Estate, or you follow us on socials. As you know, our Investor Summit is kept exclusive. Our Investor Summit is kept closed doors. We don't run any ads or IG ads or YouTube ads on it because we want to make sure that the opportunities are just focused in the JNA Real Estate community. And I'm just so happy because today we have more than hundreds of you guys who are here with us today. Of course, there are some that are still trailing in, but we are happy that you guys are taking your weekday night, Wednesday night, right? Where tomorrow you got to work to spend this time with us. And we promise you, like what we always promise in our webinar, we'll keep it short, but one thing for sure is that you're going to learn a lot. And we hope that we can provide value to you. Okay? Let's carry on.
Yes.
Okay. So what can you expect to learn today during our investment summit, right? Number one, we are going to talk about the property bubble. We're going to talk about, go back to the fundamentals. We're going to ask ourselves, hey, will there be a bubble crashing soon or not? Will prices finally crash, right?
Yep.
Number two, we're going to give you some quick updates on quarter 2, 2024. What happened to the transaction volume, residential market, what happened, a bit of commercial shophouse market, what happened for those of our investors out there who are interested in that. As you know, we have a capital markets team that focuses on commercial shophouses as well. And this is also a market that we are very deep into, right? After that, of course, we're going to give you the practical tips on the Q3 market. Where is the Q3 market heading, right? Can buy or cannot buy, right? Interest rates, money supply, how is it coming? And I heard that Joe Biden just left the election race. You know, when Donald Trump comes in, interest rates always have some interesting things that happen. What are some of the potential postulations we have? You know, thinking about if Trump was, voted, I know this is a lot of mixed feelings on this.
Yes.
I'm not going to say whether I'm pro-Republican or Democrat. I think it's going to be very, very iffy. But what I'm going to say is that, there are things that's going to change. And as an investor ourselves, how do we hold on to such information to take advantage, right? After that, which options are better, right? Is it new development now, resale or landed? Where is the opportunity at? Which region is best for investments, right? In terms of private properties. And last but not least, the upcoming land bids that's coming up. Any top picks based on our recommendations. And one thing, if you follow us on YouTube, firstly, want to thank everyone, the 7 years of weekly and daily hard work, blood, sweat and tears put in by our brokers in JNA Real Estate. I was just telling Chris while we are doing this summit for a long, long time to stay consistent, right? Has allowed our channel to reach more than 14,000 subscribers, right? And we are doing that because we just hope to bring real estate education at scale. And also hope to promote our clients' homes at the best platform possible so that we can hit the top price through operational excellence in selling, right? And other than that, at the end, we're going to go a little bit more personal. We are going to go through a bonus segment about how Chris and I, under the age of 30, by the grace of God, really, truthfully, right? And truly,
yes.
Can own $15 million worth of local assets, right? And how was our portfolio doing? How has our portfolio been doing, right?
Yep.
I can tell you, if you think that we are actually very tight ourselves and that's the reason we can do what we do, I'm going to tell you that is completely wrong, right? I know out there are going to be people who can outbid or have already outbid the portfolio. There are going to be people who are like looking up and saying, wow, this is a huge portfolio. But whoever and whichever group you are in, I just want to encourage you one thing, okay? Have hope, right? Because our God is good lah. That's one. And number two, have hope. Because every time you don't know when you need such real estate investment knowledge to take action and take the right action. Okay? So without further ado, I'm just going to go through some customary. I know we are already family. So we're going to go through some customary. If you are not on our YouTube, which is very funny, right? Please take your phone out right now, scan the QR code, go onto our YouTube and see and subscribe and watch some of our content. We have plenty of real estate investment content online.
And looking forward to more.
Yeah, we're looking forward to more.
Yes.
Next week, we're doing a very interesting, one of a kind, first time ever JNA Real Estate history of 7 years, a kind of video that we will never imagine ourselves doing, but we're going to do something very patriotic, something I think going to step out our comfort zone a little bit more as realtors. But if you want to watch more content of our investment, please head on to our YouTube. Next up, our Telegram channel, of course, right? Our Telegram channel is where you can get some good lobangs that's coming up. You know, we have some promo codes with our partners so they can help you save some money. And most importantly, be the first to know listings that JNA Real Estate is selling and also the content that we're releasing as well. And if you haven't followed us on IG, we have 2 Instagram right now. One is JNA Real Estate, which I think a lot of you guys know. The other one is JNA Capital Markets, where our luxury listings are all there. So luxury listings, we are talking about good class bungalow, we're talking about shop houses, we're talking about District 910 homes, we're talking about Sentosa homes.
Yes.
So just yesterday, I was there to do a shoot for 2 properties. One was a penthouse at 4,800 square feet and the other is at 2,400 square feet, right? And it's interesting because this is one of the best deals in Sentosa that we're taking on as listing, okay?
Yes.
And last but not least, if you are like me, or maybe you have a dog and you like to walk a dog and then you don't like to watch video, you like to put on your earphones and listen to some podcasts, this is our Spotify channel. Scan the QR code, listen to some investment knowledge, because when you have knowledge, you will always have that competitive advantage of above and over your peers, right?
Yes.
Okay, so Chris, 2024, Singapore's property bubble assessment. How are we doing? Finally or not? Can property price crash or not? Property price so high already. That's what a lot of people are saying.
But sometimes I hope so. It crashed, they had opportunity, right?
But the question is whether crash the time, whether will we be fearful to even take action now? Which we have seen before, right? When people are fearful. But let's talk about it. How is our property bubble doing now?
Okay, so let's take a look at 2024. This is the most updated data in terms of property bubble. And one thing note, from 2021 to 2023, okay, end of 2023, the bubble actually shrunk. Okay, it was 0.52, okay, 0.5, then dropped to 0.47. So what look at property bubble is, long story short, is below 0.5 is considered as fair value undervalued. Okay, above 1 to 1.5 is overvalued, and above 1.5, it's actually looking at towards a property bubble.
Yep.
Yeah, so something that's 0.5 is actually very comfortable, and now currently it's actually pretty fair valued.
Yep.
And the reason why this is so is, if you understand a little more about what happened to the whole entire world, there's a deflation rate of property bubble, where what we see is in most cities, either price has either crashed, okay, or rather there's high interest rates that kick in. They allow people to hold their horses when it comes to getting a property and not over-inflating the price. So there's something that allow the bubble to deflate in most of the countries.
I think one thing that if we don't know why property bubble is so controlled in Singapore's market is I think if you have followed our content or followed our webinars or seminars long enough, you will know that the artificial government cooling measures have done a great job in ensuring that there is no property bubble. So if we are waiting for property bubble, the government will have already seen it and stopped it. And what is the problem with property bubble, right? You may be wondering, why do I need to know about property bubble? Because a lot of people are banging on the fact that if a recession comes, property prices will drop. Okay, today, if you want to learn one thing, the one thing is that property bubble bursting will then result in a crash in property prices, but not a recession, because it goes back into the amount of liquid cash flow that we have in our household balance sheet later, where we are going to show you, right? So we are covering this because I want to share with you that if you are still waiting for the best time and you're waiting for property bubble to burst, right?
Yes.
Firstly, there's no property bubble. Number 2, we had a lot of clients last time who waited for 7 years. They missed 2 real estate cycles. And right now they say, 曾经应该 should have take action, right? But we don't want you to be this kind of individuals, right? So this is the reason why we cover property
Yeah, a
bubble.
lot of people think that if price is going higher and higher, would it finally come down?
Yep.
And that's something that we look at property bubble as a sense of measure, such that if there's a bubble, then we should be wary. But if there's not, it's safe.
Yep.
Okay, so what we can do over here is to look at this property bubble versus GDP index. Is something we trace every single quarter. That's why we always host our investment summit every quarter to give the latest update. So what we did over here in this chart is we plotted the GDP, gross domestic product, against our property price index. So property price index is actually the blue color, okay, the dark blue at the top, okay, and the GDP actually represents the orange line at the bottom. So what we notice is whenever the blue line exceeds the orange line by a huge margin, like the 1980s depression.
Get ready for the crash.
Yes. 1996 Asian financial crisis, 2000.com bubble, and also the GFC, and also even there was in fact a slight bubble that almost appeared in 2013, 2014. Then there could be a price correction.
Yes.
And it's only after the 2013, this measure called TDSR, Total Debt Servicing Ratio, that came out that control our loan, that bring people over leveraging, that causes the market to cool down much more. And that's when the GDP managed to catch up. So where we are today, you can see right now in the snapshot, our GDP, okay, was actually higher. It was higher, and now it's still higher than our property price. So for now, we are safe.
Yeah.
And that's something that gives us assurance that, hey, if our property price is not being overinflated because there's no bubble in the first place, it just means that there will be unlikely to have a crash.
I think the next question will be, is there truly a correlation between GDP as well as property prices?
Yes. So let's take a look. All right. So one thing to take note is we also trace this matrix, our GDP growth versus our property price. And we found that the correlation, the R square value, historical correlation is 0.74. Very, very high. In fact, it's above 0.7 is pretty decent.
Yeah.
And what we see over here, okay, the bar chart in this diagram represents our home prices growth. You can see in 2027, 2007 future price. 2007, you see our property price went up by 31%.
Yes.
And that was also one of the peak highlight for your GDP growth. Okay, and subsequently it's quite similar in 2010. When the GDP went up by a huge margin, the price also went up. And during the years when GDP growth is slower or something negative, when there's Asian financial crisis, it almost hit close to a negative back in 2020. But with that, our price actually held firm because there's something you'll trace later about household balance sheet. What prevents the market to crash? Besides looking at bubble, we also look at how strong our household position
and
is.
also the tendency of having fire sales in the market, right, based on the household balance sheet.
Correct.
All right, cool. So how is our GDP doing in the second quarter of 2024?
All right, so good news. Okay, our GDP currently, as compared to 2023.
Congratulations. That's why a lot of people are watching this video because you also can afford to buy property already. Congratulations.
In fact, in this year, 12th July, this very recent 2024, this is a very recent news. We have been tracing all these kind of macro trends to make sure that we get the best news. What we see is quarter two for 2024 is 3% to 2.9% increase as compared to previous year, which is 1% to 1.1% and 0.5%. So it is actually a healthy sign of market recovery to some extent of correlating to potential increment in terms of prices. But of course, that we will trace later on using other metrics.
Yes. Let's take a look at our Singapore's household balance sheet, right? Will there still be the auntie or the uncle that will fire sell the property or not?
Yes. So this is something very important.
Because they cannot afford their mortgage, right? Will there be? Are we over leveraged? I think that's the key.
Yes, indeed. So this is something that we trace to see that are we borrowing too much? Because if you understand 2013, after TDSI is up, our borrowing power actually was decreased by a huge margin, almost
by a huge margin.
By half. So it prevents people from borrowing too much with the same income. So someone that can have the same age, same income can only borrow half of what they can borrow last time.
That's right. So it greatly reduces speculative activity. That's the reason why we understand why you're in this seminar or webinar. It's because you also don't want to, you have one shot to fire. Maybe you have one bullet or maybe two bullets for some who are more blessed, right? Two bullets to fire, you don't want to fire the wrong bullet because the bullets are just so rare, right? So let's see, how is our household balance sheet doing currently?
All right, let's take a look. So what we see over here is, over the years, you can see in the first diagram, okay, it's just showing liability versus our financial assets. Financial assets include like your liquid cash, your fixed deposit, your stocks, your shares, etc. Okay, you can see the gap between the liability and the financial asset is widening, which means there's no more buffer. And along with your property asset, it's also widening. So in total asset value versus liability, you can see the gap is widening. So why we're looking at this is because we want to make sure that our debt is not climbing faster than our property price or our financial asset, which allows us to have a buffer of higher equity and net worth over time.
So how much is our buffer then?
All right, let's take a look. Okay, crunch the numbers. Okay, so what I did is I got this. All this is all online in SingStat, where it's looking at household net worth. Okay, where basically we have financial asset and property assets versus liability. So our household net worth currently, fun fact, is 8.6 trillion.
Wow.
Which is almost 8.17 times of our liability, which is our loan. Which means if we sell all our property, clear our loan, we can pay our loan almost 8 times.
Previously, I remember it was lower, right?
Yes, previously, if you look at the previous year, 2023, is 2.68 trillion, 2.69 trillion, and it's only 7.48 times the liability. So we can see our household net worth versus our loan is actually getting stronger and stronger over the year. 6.8 in 2022, 7.48, and now crossing 8 times.
So it just shows that Singaporeans are getting richer.
Yes.
And have more savings. Correct. So if let's say a black swan event comes, and unless there's a war, touch wood, it won't because National Day is coming. But let's say if touch wood, things happen, property prices will not, property will not have a fire sale because it's very rare for people to even want to force sell the unit.
Yes, indeed.
And that's what we are seeing on the ground, right? The data don't lie, and on the ground information and on the ground experience don't lie, right? How's our cash flow analysis then?
All right, cash flow analysis, you can take a look okay, in this table here, okay, this before I go cash flow, we look at our asset growth. So you can see financial assets, 2023 quarter 2 to 2024 quarter 1, which is the latest data we can get from SingStat. It went from 1.71 trillion to 1.79 trillion.
Wow.
Which includes our deposits and CPF even, which went up. Okay. Our property asset, okay, we look property asset also went up in value, went up, okay. So our net worth actually went up almost close to, I would say, 7 to 8% in terms of net worth. Our liability only went up by a bit less than 1%. So it's a very strong household balance sheet we're looking at right now in Singapore. Okay. And if you look at just purely our cash, okay, our cash flow, free cash flow, which only includes two parts. Okay, if you exclude shares, exclude property, exclude all kinds of life insurance, looking at this cash, we're $623 billion. And CPF with $580 billion. This total out to close to $1.2 trillion. And to be even more exact, okay, a lot of free cash flow. If you were to look at CPF, well, CPF, you know, there's SA, special account, RA. We only look at purely the OA account, which you can use to pay a housing loan. Every month you can clear a certain part of loan. If you want to even, it's actually 232 billion estimated. Including our cash deposit, everything included, we have $855 billion.
Wow.
And what does it mean? Okay, compared to our liability, which includes all the loan, 364 billion, it's almost 3.17 times.
That's insane.
Yeah, it means that we don't even sell our property right now. We just use our cash to pay down our loan. We can pay 3 times more. So it's very strong. And why is it important? Because in a market downturn, if the market were to go down, what happened in COVID-19, which interestingly, that's one main reason why the market did not crash. Back then, although GDP dropped by 8 to 9%. It's the very interesting correlation. Where basically COVID didn't drop. It's because our cash flow position is strong. Back then it was about 2 times. Now it's even stronger, 3.17 times. Cash. So Singapore are getting richer. To some extent.
100%.
So
more productive as well.
More productive. Okay. And why is it important? It's because compared to US, if you talk about US right now, okay, the contrast is huge. US is currently, the ratio for deposit towards the liability is 1:1.
1:1.
So they clear all their cash to pay down debt, they're left with nothing in their house. And they have a lot of high consumer debt like credit card loans, etc. Singapore is actually very, very low.
And that's also one of the reasons why in the Western world we're seeing that there's a dip in home ownership, but rather rental. Because I can imagine the amount of stress I have. Let's say the amount of money I have in my bank is just nice to pay off my loan. Wow, I'll be so stressed, man. But Singaporeans, we are very good savers. Right? I think the kiasu spirit is in us as we welcome National Day coming up soon. Okay? So in summary, for this entire segment, we're sharing with you that number one, of course, what we do in all our investment summit is always number one, talk about if there is going to be a fire sale opportunity, right? And number two, whether it's the property market going to crash. So if you are in the JNA investment community, right, remember, don't ever say that the property market is going to crash or is it going to be a fire sale, okay? If not, very shameful for us. Okay. Next up, let's talk about the quarter two, right? Quarter two market, how has it been performing so far, right? Specifically, let's talk about the private property transactions volume. How's it? Are people buying or people not buying?
Right. So let's take a look, okay, in the different markets, how the transaction volume have been. Okay, we first start with the private property, which is over here. You can see in terms of new sale, sub-sale, resale. Okay, why is it important to look at transaction? It's because we notice there's a correlation, some kind of correlation to see whether there will be a market uptrend or a downtrend, or rather a trend where there's no constant. Okay, it's by looking at transactions. With transaction, you look at this chart. When there's more transaction, you can see over here represented by a blue bar. Okay, over here, high transaction volume. Usually, what we see subsequently, the price will start to grow by a huge margin. But when there is low transaction, the price either stagnate or in some cases, if there's a property bubble, which is what happened last time in 2008, 2000, and 1996, there may be a crash. Okay, so what we look over here is, if you take a look at resale. Resale wise, okay, for private property, transaction volume, okay, is actually much is higher as compared to during the low times in 2020 COVID-19 period. In the times of 2014, where after the ABSC and all the TDS cooling measure came out, during the 2009, which is right after the financial crisis in 2008, this shows that our transaction volume is actually still healthy. It's still on a higher volume as compared to something that is low back then. Okay, and why is it important? Because if you look at this slide, okay, which is the recent years, what I've been observing in terms of trends is that whenever there is a dip in transaction volume, okay, a huge dip. Like what happened in 2019, the start of 2019, what happened is you can sometimes end up seeing a stagnation in terms of prices across the market. But when you can see 2020 mid or 2020 end, which the time actually I entered the property, although like people were fearful of COVID-19, etc., was when after that, when transaction volume started to pick up in the next few quarters, you will see that this could be a telltale sign that is a leading indicator to allow the price to grow by a certain margin. Okay, and when transactions start to dip again, the price stagnates. Okay, so where are we right now? We are actually higher when it comes to the property price as compared to 2020 and, as I mentioned, the bad times in 2014 and 2008 and even 2003 during SARS period. So it shows that the market is still transacting healthily. And this is something that we do have to take note. If you're wary of price crash or price stagnation, this is not a clear sign right now in terms of the next the market in general. All right.
I think you can observe that there is a drop in transaction volume since 2020 because some individuals, they cannot accept the fact that interest rates are going very high,
Yes.
right? And for investors specifically who are looking to buy resale properties in the previous few months or years, right? Most of them realize that there is no positive carry when it comes to buying their own property, whereby the renter can't even cover the mortgage unless you get a very rare asset that we have seen before.
Yes.
We have gotten our investors to buy before. But the question here then is, in Q3 this year, would there be a chance whereby interest rate will drop? And if interest rates drop, and let's say transaction volume goes up, based on the correlation that we've talked about, what will prices be like?
Yeah, that will be covered later on.
That's right. Okay, so let's talk a little bit more about the other side of the markets, right? We have seen that, private property prices, in terms of the resale market specifically, we see a dip in volume of transactions, but ultimately still healthy. Prices are on an upward trend, right? And we have realized that the prices in the market is always dropping or dipping because of regulation in the market, right? What about in 2024? How in the HDB market is doing? We are seeing $1.73 million HDB, right? That is done.
Yes, that
right?
is
So how is the pricing?
1.7. Wow,
Yeah,
crazy.
crazy, right? So how is the pricing like?
And so what we noticed in terms of transaction volume and prices have climbed almost close to, from 420 to 600, maybe about 30%, they're about 20-30% ever since the past 3 years, after stagnation for almost close to, I would say, 5 years and a dip from 2013. So transaction volume as compared to the past have been consistent. Except for 2020 period, there's a slight dip. So it's still a healthy volume transaction. But of course, HDB cannot, it's not something that we look in terms of like the prices and transaction volume, because what we have to look is more about supply demand.
Yes.
And what we have to do is to compare compared to private property where there's upcoming land bids. It's easier to trace where the prices are going. But in general, what caused this price increase in 2020 is because of COVID-19, where a lot of the individuals couldn't get a housing.
BTO, right?
BTO.
Yeah, housing options, yeah. And rental was sky high.
Yes.
Yeah.
And rental was sky high, and that's why they actually went straight into the resale and really like ramp up the whole resale market.
Yeah. But one thing to take note of is also that the HDB, the government is also doing measures to be able to control the pricing as well. And that's also one of the reasons why we are not a fervent proponent when it comes to specifically investment through HDB, because we don't want to be affected by government measures, right?
Yes,
but of course, in the private market, government will also have measures, right? But the narrative in the private market has always been that 20% of the market, the government wants the price to continue to climb, but slowly, not too fast. Too fast, then cooling measures will come already, okay?
Yes.
How about the non-landed price trend, right? Let's talk about the private property prices, non-landed part. How is it doing?
All right. As compared to that of HDB, it climbed 142% since the start of 2009, all the way up. And the recent years, if you look, it went up by almost 47%, 50%. So it does outweigh the HDB. In terms of quantum-wise, of course, you buy a 1 million, you make 500K.
Yeah.
You buy a 400K HDB, you make maybe 80K.
Yeah.
So it has that difference. But in general, what we noticed today in 2024, Q2, the transaction volume, as mentioned just now, has actually gone higher.
Yeah.
Okay, as compared to 2020 and also 2014 periods. So this is a trend that we notice, that the transaction volume is still healthy. It's not going down in general in this season of time. Right? But let's take a look at the different areas in terms of CCR, RCR, and OCR.
Yeah.
So in terms of CCR property, if you take a look at the chart right now, okay, transaction volume has started to be more stagnant, okay, to some extent. And the reason is because during this period of time, as compared to 2021, 2022, the resale property back then, okay, they had more like no COVID-19, there was a ramp up.
Yeah.
But right now in 2024, this period of time, some of the CCR property, the amount of demand for this area, especially after the cooling measures are up and the government ABSC ruling for foreigners, it actually created a negative impression,
Yep.
and it stifled the demand in this period of time from 2023 all the way to this year. So that's why in terms of prices wise, it have taken a stagnation phase. Yeah, where along with the new launch and resale prices, it hasn't seen a huge growth in terms of this 1 year, although it went up by a bit. Not a bit, more like 10 to 15% for 2021 to 2023. And one thing to take note is also in CCR, why one reason the price didn't go as crazy is also because of the fact that there was no new land bids, no new launch that set the new benchmark. A lot of new launch set a new benchmark as compared to OCR, RCR region. Yeah. But this is something that we also are observing, and this allows certain opportunities which we describe later on.
Which is also the reason why we are seeing that a lot of the CCR developers themselves are unfortunately, but fortunate for consumers, facing some tight QC timelines that's coming up real soon. If you haven't watched our video on QC timelines, we predicted some of them are already reaching QC timelines, and we're quite excited about that. And because of that, that's the reason why prices is not really driven by the new launch pricing there, because developers themselves are also very realistic with the pricing, right?
Yes, indeed.
But then what about the RCR and OCR region? Because we are seeing crazy things happening there. We are seeing above 2,000 per square foot, 2002 to 2004 PSF price trends as well. How's it going for RCR?
All right. Okay, so for RCR wise, you can see in terms of the transaction volume, okay, this season it's, I would say, constant as compared to 2021 for RCR, but the price has went up, okay, from 1,800 per square foot, also about 10 or 15% in general. And this is where we see that it's quite correlated to the new launches that actually set new benchmark, along with the fact of some of the properties in CCR where the prices have to some extent stagnate to allow the RCR to catch up. Okay, so what we see over here is because of the fact of not just transaction volume, but also of the new land bids that set the new benchmark again and again, RCR, okay, that even hit closer CCR property prices. This allowed the price to climb over time. Okay, and this is a sign of not just transaction, but also a sign of transaction volume, but also a sign of market forces pushing up in this period of time. Okay, and last one, let's take a look at OCR price trend. So for OCR price trend, is one of the top performers over the past period of the past 3 to 4 years, where you see the prices went up by close to 40 to 50%. Okay, and this is where you can see OCR is a time where there are lots of new launches that actually continuously set benchmark in terms of prices, okay, and this allowed it to continue climbing along with a healthy transaction volume consistent over time from 2021 to 2024 this year. And what right now is later you will see where we can see even resale transactions, they're actually already crossing past some of the new launch prices for quantum. And this is something that in terms of actually COVID-19, there are a lot of people looking for bigger units, for resale units or for new launch units that has a certain quantum that you can accept. That's actually ramp up the volume to allow the price to continue to climb.
I understand.
Yep. So that's all for non-landed, for private residential. Now let's take a look into landed price trend.
Yeah.
All right. So in 2024, okay, there's quarter two. What we are seeing over here is, as compared to the 2021 or 2020, okay, it's definitely significantly lower. In fact, last year the market was actually pretty quiet for landed. For some time, one of the lowest in terms of transaction volume. Okay, after the price had climbed from 2021, it went up by almost close to 50% for landed. Crazy, one of the top performer. And after that, because people say that, hey, the landed is on the higher side.
Yep.
And if you see in the past 5 years, it went up by 50% higher. And along with the fact of high interest rates.
Yeah.
High interest rates. That's when we see that people are a little more apprehensive.
Yeah.
Yeah. And not so keen to commit to a lender of higher quantum because the mortgage is high.
Yeah.
And that's when it started to stagnate from 2023 till today. So where we are today, we'll explain it later and see where are the next trend that's going on for this market. All right. And in terms of GCB, I think Jervis, someone that very into this market and negotiating quite a few of this big quantum landed. So maybe bring us through how is it going for?
So for the GCB market, I think in terms of transaction volume, we are seeing that there is a dip, right? So previous year, back in the year 2022, we see that there were a total of, 2021, about 96 transactions. In 2022, transactions dropped to about 48. Just last year, we are seeing that the coveted transaction was only close to like 16. And then this year at the start, we are seeing even more than 20 transactions already done. So is this the recovery of the GCB market? The answer is no. Okay, the reason behind that is because firstly, on the ground information and on the ground knowledge, we have been just before this seminar, we are negotiating a $27 million, $28 million deal. But most importantly is that we are saying that this data that is being caveated right now was actually optioned last year. So if you are in the market, you'll know that 2023, there was on average about 30 to 35 GCB that was sold, but it's just that the exercise date got pushed forward to 2024, right? But are we seeing an increase in interest, right? Based on the data, you can see that transaction volume kind of dropped, and it's true, but are we seeing an increase in interest? The answer is yes, absolutely. Because there are some plots that we see in the market for 2 to 3 years, they are getting increased offers, volume of offers are increasing, because I think most business owners also are betting on the fact that even though there was an increase in property tax that they had to pay for the residential home, right? But the interest rates may be falling in a way such that their mortgage get even more of, affordability is not really in the dictionary for these individuals, but more of it is more fair to pay this kind of mortgage if they would take a loan, right? So this is what we see in the GCB market, right? And specifically in the commercial shophouse market, if you take a look, we are seeing that there's a crazy amount of transaction that is done, especially after we see that foreigners can no longer buy residential property without that 20% ABSD, then 30%, then now 60% ABSD, right? And we are seeing that and there's an increase in the ultra high net worth space. Most owners are very confident to hold firm onto their pricing. And because they know that there are other foreigners who have no option but to buy commercial shoppers. I'm talking about high net worth and ultra high. So 5 mil up and of course $30 million up net worth, right? And no prizes in guessing, we saw an increase in transaction volume in the year 2023, right after the ABSD ruling came out for the foreigners. And then we saw a dip in 2024. And the reason for the dip is not because of the lack of demand. One thing about commercial shop house, when you're in the market, you will know that a lot of people are interested, but the pricing is really unrealistic. In the entire market, there's just going to be 1 or 2 plots that you can truly consider. And that's what the capital markets team does to identify the right deals. Okay. So now we're going to go into the next part of this segment. Where is the trend heading next? Last time a lot of people say that we talk too much.
Yes.
So now we're going to talk a bit lesser. But I think almost people want to know quarter 3, okay, I hear quarter 2 already, update like that, okay, the transaction volume drop a bit, prices, but I see the price keep going up, right? So let's talk a little bit more about quarter 3. What is our personal direction? Where are we heading to next, right? So let's talk about the interest rates and M1 money supply.
All right, so this is something that we have been observing very closely because it does future pace the future demand that's coming in the next 6 months to 1 year. And by looking at where the money flow is always a leading indicator. Okay, so with this, right, before talk about interest rates, let's link to this thing called M1 supply, which is the money one supply. So the definition of this is actually the total amount of physical currency and coin, demand deposits, travel checks and checkable deposits circulating economy.
That's more money lah.
Yeah, long story short, it's just more money. It means like
it's just quantitative easing.
Quantitative easing, where basically more money printed. Okay, you want to put in a layman term, and how it actually correlate to our asset price, which we have been looking and tracing. We'll see later on the correlation, is that when there's more M1 supply, okay, in general, more money being printed, usually through quantitative easing, that what happened is all this extra money is printed, okay, or from quantitative easing. The layman way is there'll be extra cash supply in the bank. So bank will say, I have this amount of cash, and they want to let people borrow. So because they want to, this is a way that what the government and the Fed actually does to actually allow to stimulate economy. Okay. So when banks actually borrow, they borrow not just to businesses, they also borrow to individuals. And what they will do to entice borrowing is to drop interest rates. That's why it's quite interrelated. And when you drop interest rate, what will happen is housing loan, okay, the amount of housing loan taken will be for property will be increased. People start to it's cheap borrow. 0% interest rate, 1% is free to borrow. Why not just borrow and buy something? And that translates, okay, and this also came to Singapore in terms of all this money supply from Fed. Money flows globally will come to Singapore, and that's when borrowing power becomes cheap, borrowing easier, and that is when there's more borrowing to buy houses, the demand for housing will increase, and this subsequently will lead to the increase in real estate prices. And this always, you can see later on, a leading indicator. Okay, leading indicator before our price actually goes up. And what we do next is we actually look at this thing called our Singapore M1 supply flow. Okay, and we can see since last year, okay, the M1 supply flow have been increasing steadily. Okay, and if you look at this particular chart, okay, this is our 50-year M1 money supply flow, and compared to a long time ago, you can see it's much higher. I mean, of course, with more FDI coming in, there's also potentially one contributor. Okay, and what happened is that in the recent years, okay, if you remember in 2020, okay, when during Trump presidency, what we saw that money was being printed. Okay, of course. Okay, Trump don't print money. It's actually the Fed that print money. But of course, you must understand.
I see some individuals here that are in GIC and the government Temasek Fund. So please correct us if we are wrong. This is
we're trying to make it layman. Okay, but what happens is when there's an M1 money supply flow actually increases. Okay, from 2020 to 2022. Which was, you can see, it actually correlate to a property price boom. Okay, and what we see over here, if you look at this chart, okay, in terms of property prices, following by that logic, the very simple way of thinking is, you can see a property price index from 2020 to 2022 actually rose by a huge margin in terms, especially when there's high M1 money supply flow. But subsequently, if you look at it, when the M1 money supply flow dropped from 2022 to 2023, there's this thing called quantitative tightening. Okay. This actually, usually it will translate to the reverse of lower interest rate. It will actually increase the interest rates. That's how they do it. And this actually tighten our borrowing power, and it allows us to borrow less. And mortgage become more hefty.
And that's also the reason why we are seeing that in the year 2024, there's a reduction in transaction volume in the market.
Correct.
Right?
Yes. So demands drop, and that's why we see in Singapore, the price actually starts to stagnate for almost 1 year. Okay, 1.5 years. So this is something that we notice in terms of price growth, that coupled with the higher interest rate and lower M1 money supply flow, this is what we see. And right now, where we are, okay, if you look at the next phase that we're looking at, okay, in 2023 end, the M1 money supply flow is starting to be on the uptrend. And along with the fiscal policy that by Fed to want to cut interest rate in the long-term run, that's something that we'll be tracing very closely to see how would this actually affect our demand. And this is usually translate to increased uptick in terms of demand and also uptick in terms of purchase of property.
So what you're trying to say is that because there is an increased amount of money supply in the market, there are more people with more money, then the loans get a bit cheaper. So you are foreseeing that based on the correlation of M1 money supply, so property price index is M1 money supply is increasing, property prices are on the uptrend. Right? What about interest rates? Everybody's very interested about interest rates. Right? Just to be very honest with you, I don't want interest rates to fall too much. Because firstly, as you know, I'm a fervent proponent when it comes to new development investments, right? Interest rates don't really affect me too much because of progressive payment. But, because I know that if it drops, people are getting more confident to sell at a high price. As an investor myself, I don't want to buy high, so I'd rather interest rates stay high. But let's see. What is the...
Hopefully it prolongs a little bit longer so we have more time to purchase. So the question is, will interest rate rise or fall in the next quarter? So one thing that we need to trace about interest rate, okay, is to look at this thing called inflation data. So what happens is whenever inflation is high, and that's one reason why Fed actually raises the interest rate to discourage spending, okay, is when interest rate, when the inflation data is high, hit 9.1% in August 2022, very high. That's why they increase interest rate very quickly. And that actually lowers out the inflation rate. Okay, which now is actually very healthy, about close to 3%, 3.2%, which is much healthier, which is, they hopefully can lower down to 2. So when we look at this, okay, when inflation doesn't go out as high, okay, that is when Fed will say, hey, it's a green sign. It's a right sign to start to lower. That's why if you look at the Fed December dot plot diagram, what we notice is for now, this is 2024. They're hovering about 4+%. Okay, 2024, 4+%. And subsequently, they will be looking to lower down to close to 2.5 in the longer term.
Yeah.
Longer term. So this is something that Fed have been saying multiple times. And very interestingly, which is something that we will discuss later on. Recently, I don't know, Donald Trump actually mentioned that, hey, don't drop the interest rate so fast. Don't drop the interest rate so fast. So it's something that I'll discuss a little more regarding the how this Trump presidency it could be a black swan event that may happen in the later times.
Yeah.
Okay. And what we have to take a look at, why is it important? Because as I mentioned, interest rate, which is linked to M1 money supply, we link to our product price, is also quite interlinked, quite correlated. Where what we see is, you notice over here, this chart, okay, when you see the front chart, which is darker color, it is actually our interest rate.
Yeah.
So it hit close to 3+% in 2017 last time, 2.5 to 3.
Yeah.
Then it dipped all the way close to 0.
Yeah.
Okay, back then to similar market, then after that, it went up to about 2% again.
Yeah.
Okay, in 2019, before the huge drop, rate cuts during the 2020 period. So what we notice is whenever interest rate increase to a certain extent, what we see is that the price start to stagnate a little more, although some can still go uptrend. But when the interest rate dips, okay, our price will climb very quickly. And this is something that, once again, is quite interrelated to M1 money supply.
Absolutely.
That's why we're tracing both of these factors to make sure that our clients really get the most updated insider news.
Yeah, that's also the reason why when it comes to helping our clients invest, or even ourselves when we're investing in the market, we always hope that interest rates go up, but let's not choose assets that is very predominantly affected by a high interest rate that you have to bear the brunt of it, right? And that's also the reason why when we are talking about, when our clients are very excited about interest rate dropping, we are not too excited, because it also means that it's harder to buy more reasonable and even sometimes undervalued assets in the market, right? So let's just talk a little bit more about this black swan event that we're talking about. Because as we know that Joe Biden just recently, okay, we're not going to talk about politics today, but Joe Biden just decided, okay, I'm not going to, I'll call it quits. Maybe he feel that he's a bit too old after stuttering too much. It's so stressful to be a US president, right?
He got COVID.
And running out the race, Kamala Harris just entered. There's a possibility that Donald Trump may be elected again. So if, let's say, Donald Trump is elected,
yes,
how will the Fed look at it?
So Fed and Donald Trump, they are two different. They are not. So Donald Trump don't control the Fed. They are two independent party. But what Trump does, he can actually create policies. They actually force the Fed to lower down. And it's something that, okay, after the assassination failed attempt, the chances had actually went swing towards Donald Trump. Okay, to almost like close to 60%, above 60% to win. So this is something that we are looking closely, because this is just very updated 12th June, okay, this year. But what we notice is, if you trace back to 2017 to 2021, Trump that period when Donald Trump was still elected, okay, in 2020, that season of time, okay, what we notice is actually Trump actually told the Fed, when during COVID-19 came in, can cut the rate even more, okay, during the coronavirus outbreak.
Yeah.
And it's something that he does a lot of, he doesn't tell the Fed he doesn't control the Fed rates, but rather he create this policy where he actually stopped the trade between US and China, and to make the economy very where most of the trades that come from China, they stop this kind of thing, and it forced the Fed I want to stimulate the economy.
Yeah.
What can I do? Yeah. And the only thing they can do back then is to cut the rate
and borrowing. Yeah.
So the rate actually cut from close to 2 to almost 1.3. Then it went all the way to 0. Yeah. And this is something that's why in most of the presidency, we mentioned this now, a lot of business are actually quite pro-Trump. Yeah. Because they always look at more economy and to boost growth. And there's something that potentially, and right now it's very interesting. Trump said, don't cut rates now. Yeah. Wait until presidency later. But I won't be going to conspiracy theory, but rather think of how Trump will want to stimulate the economy in a certain sense. He's always been encouraging rate cuts, encouraging price growth, encouraging inflation and business to boom. And that is when we see this potential, if Trump were to come in, these rate cuts will be even more effective when it comes to the subsequent times. But of course, this once again is just a black swan event that constantly we trace it. But the key thing right here is where is the direction heading is of course of lower interest rate.
So it's just a nice filler to let you know some things to think about tonight if you're just thinking a little bit more about which president US president will it affect us, But most importantly is that we also have established that interest rates are on a downward trend, for the next quarter. There's some hearsay, of course it depends on the Fed, right? That late quarter three to early quarter four this year, we're going to see another drop. But are we seeing a drop in interest rates through our mortgages? Chances is yes, we're seeing a slight drop, a slight dip here and there, right? Not like the crazy previous years of crazy percentage. And I do hear some bankers asking for refinancing of our clients' property and charging even higher than previous interest rate.
Yes.
So it's so interesting, right? But luckily we got a refi of a good bank. So if you haven't done refinancing, please talk to your brokers. I think it's really important because you don't want to pay a high interest rate when people are paying slightly lower. Okay?
Yes.
So next, let's talk a little bit more about which options are better then. Okay, now, let's make it simple. No more president talk, no more politics, right? This is definitely not in our forte. But of course, anything that affects real estate, we'll talk about it. But let's talk about new developments versus resale, landed or non-landed. Should I buy landed now if I can afford? Should I buy non-landed? Should I buy resale or should I buy new developments? Let's talk about it.
Fun fact, this used to be almost 50 plus side, but I cut down to 3.
Yes.
To summarize, because we realize it's something that we want to give you the crux of it. So what we have been noticing recently in terms of resale versus new sale price trend, is that the gap has been narrowing to a certain extent. And you can see, back then in 2017, 2018, you can see that new launch and resale price is exactly the same, PSF. Exactly the same, which is very rare. And that allows the new launch to climb by a huge margin. Subsequently, after 2020, when the new launch price climbed, people make money from this particular trend. There was another price growth which is hedged by later we see land bid prices that continue to push it up, which is something that we trace for new launch prices to see can this support the growth of it. And what we see in the resale market is start to climb almost close to 40-50%. That was a very nice time for that of 2022, 2021, and where the price had climbed close to 50-60%. And currently, where we are standing right now in terms of new launch and resale price trend, we're seeing in certain areas, in fact, some of the resale prices have almost gone past in terms of total price as compared to new launch prices. Quantum. And for new launch wise, there are some dips here and there that allow a safety buffer for the new launch to catch up. But as compared to that of 2022, the range of 2022 to 2023 period, what we see over here is the gap has slightly narrowed. And in terms of anecdotal examples on the ground, we have been seeing more of the resale units that has surpassed that in terms of price quantum, total price, as compared to that of new launches.
Absolutely. So today, if it's a new development and resale, which will you consider?
Depends on areas. So that's something that we will dissect even more based on areas. If you have any question, you can actually discuss with your broker who brought you.
Okay, let's talk about landed versus non-landed then.
Alright, so landed versus non-landed, what we notice is a very interesting trend. We have been tracing this was we are seeing that the uptick of the 4 to 5 million quantum landed has been on a uptick just recently after a cool down for the past 1.5 years. So what we notice is for the landed and non-landed, the price has went up. So what we trace over in this chart is for bigger size unit for non-landed. There's more than 1,500 square feet.
So this is an apple to apple comparison to a landed, right?
Yes, because it's this group of people who stay in this big size non-landed who may want to upgrade to landed. So if we see that these prices are actually, in terms of quantum, have been reaching and touching they're touching in terms of the prices, that's when there could present opportunity for the people in the private residential to jump into the landed residential market. So on the left, you can see over here, those are resale wise, it was close. Both have been climbing up in tandem. And right now it's there's a gap, between the landed and non-landed resale. But another thing that we trace very carefully is also our non-landed new launch. So you can see if you zoom in deep into the prices for landed price. It have been going on average. In whole Singapore 825 volume, about 5.4 million on average. But when we look at our new launch prices for some of the areas, in fact in the RCR area, okay, have even climbed plus to 5.5 million for some of the big floor plate new launches and average out to a 5.5 million. And meanwhile, Strata landed have also hit close to 4.6 million on average. So this actually presents an opportunity for some areas, not all the areas, where the landed and new launch prices are close.
Yeah.
And people have been looking at this and starting to jump on the bandwagon for certain quantum of landed.
Absolutely.
So once again, it really depends on area. Not saying that all landed is worth considering, but it really depends on whether the pricing in the area makes sense. Yeah. Okay. And one example just to share is in terms of CCR terraces. Okay, for some of this about new terraces, some old terraces are about 7 million.
Yeah.
Some new terraces are about close to 9, breaking at 9. We can see for the resale units, there is newer, less than 10 years old. Okay, big floor plate units in CCR, some areas happening 7.6 million.
Yeah.
So it has been closing up in terms of the barrier entry, allowing a window to jump. Of course, there are other trends that we have been tracing. That's where the 50 plus sites comes in to actually trace what exactly is the jump and what exactly are the barrier entry looking at this window opportunity. Yeah. So with this, it is just a very quick snapshot of how we actually trace opportunities in the market to enter.
Okay, so let's talk a little bit more about regions.
Yes.
Which region should we invest in now? OCR, ASEA, CCR. So we've established that you mentioned that between resale and new developments, right? We will have to consider based on the locality, look at the per square foot entry price, and then we identify which is a better option, right? And then let's talk about landed versus non-landed. We are seeing that there's a convergence in the gap. Then after there was a widening of the gap between landed and non-landed. And since the per square foot of a new development above 1,500 square feet has caught up with the landed PSF, then it doesn't make sense to not consider landed as an option if under affordability, right? So let's talk about the private property trend. OCR, RCR versus CCR. Where are we going to with a couple of regions facing some tight QC timelines coming up?
Yeah, that's where the opportunities are also. So another, so this is for private condo, private residential. So private properties, OCR, RCR, CCR, where is the trend going towards? So what I've been tracing is the price gap. So the price gap between the OCR, RCR, and CCR, you can see for OCR, the price went up by 62%. Okay, for private residential, RCR 43%, but when it comes to CCR property, 11%. So this is something that we're noticing for some time, that the gap has started to close up by a certain extent. And what we notice, if of course CCR property, there is a certain affordability range that will be much higher, but in general, is the gap have narrowed from last time 47% between the CCR and RCR property, and also your 113% of your CCR and OCR property. Okay, for RCR, the gap has narrowed from 47 to about 14. Okay, which is pretty decent. And for CCR, the gap has narrowed from 113 to 46%. And this is something that had never been seen, seen for the past 5 years, 6 years. But it did happen back then in close to a 2013, 2014 period when most of the market had been converging. And this allowed the CCR market to rise up to a certain extent before slowing down a little more. Of course, this is something that we have been tracing closely, but to summarize this 3 slides, okay, the point I'll make here is that the gap is narrowing. And of course, in certain areas, it's actually worth considering the CCR property, but not all of them.
100%. So one of the reasons why you are seeing that there is a slight stagnation in terms of growth of just 11% in cost central region, it is not because just solely because the prices are not catching up fast enough. But one of the reasons is because pre-cooling measures, some cost central region properties are already going at 3,500 to 4,000 per square foot, which also means some developments are actually still in the recovery phase of pricing it correctly. And owners have to be okay to sell it at lower price because they overpaid for location last time, right? And we're also seeing that there's a huge amount of spillover effect to RCR, where as we are serving individuals on the ground, we realize that people no longer put their core central region as their dream home, but rather it's the RCR region that is kind of near heartlands, but also near to central. But with the narrowing gap between CCR as well as RCR, we're seeing that there's some opportunities in the market that you can consider if you are able to consider a bigger size CCR property in the market, right?
Yes, indeed.
So any of these kind of things, when it comes to a checklist for CCR, RCR, OCR, all the JNA brokers, they have it. So please talk to them if they invited you. If not, you can talk to us and we'll share with you what's the checklist as well.
But in terms of prices wise, I mean, for CCR, OCR, RCR, it's not an indication that you must buy CCR.
100%.
Of course, there's always opportunity in other markets, and this is just a general trend. But the key thing is always that product
Yeah.
Like what exactly is that particular unit that transacted? If you find something that is of value, every single market does present opportunity.
I think both Chris and I, when it comes to the opinion of should we buy CCR or not, differs a little bit.
Yes.
But one thing that we can really agree on is that if you're buying just that one property, right, try to consider a place whereby your exit strategy is going to be easier, right? So if I have the affordability to buy a 2-bedroom, maybe let's say in Core Central Region, would I go for a 4-bedroom in the rest of Central Region? That is something that you can think about, right? Because which allows you a ease of exit. Because I think one amazing thing about real estate investments in Singapore, right, is that you are able to hold on to it and sleep for 3 years and make money. That's the beauty of having a country that continuously grows, right?
Yep.
Okay, so upcoming land bids, a lot coming up. And if you guys don't know, if you haven't watched our YouTube, go to our YouTube and find that rare QR code to scan so that you're able to get the new launch guide, right? I want to put a QR code over here. There's going to be the QR code for our new launch guide. You know, our team behind the scenes is helping us with this. You can scan it. If you are introduced by a broker, ask the broker to send it to you, please. You know, they will have it. But if you are not, please scan the QR code so that you can get the full list. Okay, in this QR code, there's going to be all the new launches that's available in 2024 and 2025, so that you can look at all the break-even price. Then you can also decide which one you want to enter. Okay, but it doesn't look very optimistic lah, based on the per square foot. So Chris, come, bring us with you. How? Upcoming land bids.
Yes.
Got the area harmonization, per square foot is getting higher, it's getting very confusing now. Everybody's very confused, right? I bought something that's area harmonized, right? So let's talk about this.
All right, so this is something that we have been tracing. Okay, because this actually determines what exactly is the PSF that will come later on. Since price is key when it comes to selecting your investment property. So area harmonization, to be summarized, just watch our video. Yeah,
just watch a video on area harmonization.
Yeah,
okay, we will skip that for now. Then we'll just go in for the interest of time to Jalan Tembusu.
Yes, all right. So this is just an example of area harmonization. What does it cost? Okay, I'll just say the effect of it is that for every land bid that you're buying right now, okay, you have to add a 7% to it.
Yeah.
Okay, rationale, okay, you watch our video because it's a long explanation. But in general, using this, okay, how we actually predict upcoming price, whether our current prices we're entering in the market is feasible, is to look at what is the future land bids.
Yes.
Because it just determines the future price trend and whether today's pricing that we're buying into is the right price.
Absolutely. I think one common trend that we see consumers or investors changing, right, in terms of perspective is that in the past, maybe back in the 2017 to the 2020 market, we're hearing a lot of people say that at this per square foot, I could have bought this. But in today's market, people say at this quantum, we could have bought this, right? So people are already changing, investors are already changing, which is important because these are your future buyers, right? They're changing their perspective towards based on a 2 or 2.5 million budget, I can buy this rather than based on 1,008 to 2,000 per square foot, right? So I think one thing to let you guys know is that the area harmonization ruling has increased the PSF, but don't be afraid by it and say, oh my, the PSF is so high now. But you know what Chris mentioned, right? There's that 7% that you got to reduce because that is the area harmonization that we have. So add on the 7% to the price and that is your new PSF, okay? Let's talk a little bit more about the different regions and in the OCR region specifically. Any new ones that are coming up that we should take a look at?
All right, let's take a look. How is it going? Okay, so first thing first, OCR regions, we will look at this land bid was concluded, okay, and just in November 2023. Wow. It is all after area harmonization. Okay, so one is at Clementi, right besides Clavon.
Yeah.
Okay, so Clavon.
Nanhua High.
Nanhua High, yes. So this unit, if you look at break-even price, was about 2,159 per square feet. Okay, if you factor in the area harmonization,
2,156, yeah.
Yeah, in terms of 15% profit margin, you'll be looking at about 2,526 per square feet. And this is, in fact, some of the RCR prices.
Yeah.
Yep. So
we just saw a successful launch. Congratulations to Kasia's development.
Yeah. Yes.
At 2,000 per square foot. Yeah. It is not under area harmonization, right?
I know.
Yeah. So at 2,000 per square foot, I think that the affordability wise for individuals who, I mean, under a $1.8 million budget, that is really the cheapest freehold in the market. But is freehold truly important? That's another question you're going to ask. Okay, next.
All right.
Let's go on to Champions Way.
Okay, Champion Way.
The next one that is going to be sold as the cheapest.
Cheapest new launch in the market in Woodlands. Because right here, the break-even is 1,687 per square feet.
Yeah.
Area harmonization, 15% profit margin will close to 2,000 and above kind of prices. And right now you can get some areas that is cheaper in terms of prices that is within a closer region to the RCR regions.
Yeah.
So that's when we notice that this is something that we trace. So honestly, this is at Woodlands.
Yeah.
Woodlands South, in fact, next
And what
to
we're seeing is
Champion
that
Way.
developers have actually been pricing close to a 20% profit margin or 15%, right?
yes.
So just look at the 20% column, and I think that'll be a more realistic pricing. Okay?
Yep.
What about the last Lentor site that's coming up soon?
The last Lentor site, also area harmonization. Okay. If all goes well, 15% pretty
Not
much
too
it.
bad, not too shabby.
2151 per square feet. So Lentor is a very interesting area. It's like, at the fringe of OCR, just cross the level is RCR. So there are some areas that we have been looking at, but at the same time, are we able to enter at these prices? Of course, it's not the most ideal in terms of price range, but there are other factors that are at play once the price is up. So we'll reassess it later on.
Absolutely. What are some of the ECs that we have? We have one at Tampines Street, 62.
Yes.
At 1,645 per square foot. Okay, let's just jump straight into it, right? Okay, if an EC at 1,645, you need a TOP time of maybe 4 years, and then after that, fully privatized 10 years. Would you buy a resale private investment or you buy an EC?
I will just buy a resale. It's 3 cycles.
So let's just skip the EC. No, I'm just joking. Okay, 1,645 per square foot. Let's talk a little bit more about this.
Yeah, so last time EC was only like 1,002, 1,001, and 1,003. Then after that, people say hi, but right now we have another one in the picture at 1,005, 1,006. And this is setting the new benchmark. And one thing about EC is, as I mentioned, not just the 8 years holding period, 9 years, is also this thing called the MSR. So the buying power of EC, if you can buy EC, you can well afford a condo that is almost double in price.
Absolutely.
Yeah, so this is something that will curb the EC buying power. And to want to enter in it is something that is on the higher side right now in the market. Yep, so that's something that we don't really consider.
I think we're very obvious already.
Yes. Yep, we're obvious.
But of course, if let's say you are a young couple who's looking to buy your first property for own stay, and really based on your affordability, you can, maybe based on the down payment, right? You can only afford EC. I think that is not a bad decision, right? It's like a BTO law or SPF law.
Yes,
but why not
correct.
consider BTO instead? Right? It's kind of same holding period and sometimes even more profits.
Yeah, even more profit. Higher ROE.
Higher ROE, 100%. Yeah.
Yes. Okay. So next thing in terms of another EC that's come up, Plantation Loop. Okay, it's all the way near to Jurong area. What we see, it's next to the expressway, AYE. And if you look at it, after harmonization, the PSS is about 1,005, 1,006 right now. So this is, I would say, same as, let's I think that summarizes it in general.
What about next? Let's talk about Tampines Avenue 11.
Okay, Tampines Avenue 11 as well, mixed development. People are looking at it, right, excited for it. Mixed D, about 2,000 per square feet.
Attractive.
Extremely attractive, but at the same time, whether they will launch at this price is another thing. Because mixed D is really coupled with the fact of, wow, I want even higher. But the key thing right now is in terms of entering.
We saw that at second residences also, right? And not only that, I think if with Champions Way launching at 2,000, if I'm a mixed D at Tampines, I think I'll go a bit higher.
I'll go higher.
Yeah, and then that also goes back to whether does it make sense to enter at this entry price or not. Right?
Yes,
because of the huge margins that we have seen prices, developers dropping price just so that they can sell when they're reaching QC timeline.
Yep. And that's what happened for Sengkang Grand. That they launched high and then the market, and now did they make as much as compared to...
those who bought high.
Yeah, for those
who entered earlier, I mean like not earlier, but those who entered the right place could have made a bit.
Yes,
right?
correct.
Okay, let's talk about the rest of Central Region, right? Pine Grove, Parcel B.
All right, Pine Grove, Parcel B. So there's something that is interesting. It's next to Pine Grove. It's right after area harmonization. So what we see over here, launch is about 2.5 to 2.6 per square feet. Okay, so there's some areas where we can see if they launch it at the market when the demand is decent, it's high, this is something that we expect to have. So 2.5, 2.6 is what we're considering. Honestly, I would say decent, not too low or not too high either. Yeah, so
when Chris say that, it means it's not his top choice. Okay,
next. Not my top choice.
Let's
Thank
go
you
into
very
Jalan Tembusu.
All right. Okay, so this is something that's very interesting. Thanks for pointing out. Okay, so this is another part that...
this is my favorite. Okay.
Yeah, this is our favorite. Yeah, so this is one of our interesting plots that we have been looking at very consistently because the break-even is decent, 1,911 per square feet. And
Sim Lim is known to price well.
Yes. Sim Lim, if you know Treasure Tampines, when they want to price, they price it at a decent price and subsequently shift it up in terms of price.
And I like that because the later buyers of Grand Diamond or Tembusu Grand or even Live at MB, they have already paid at a higher per square foot than what I would have entered if I entered Emerald at Katong, right? This is something I'm very attractive. And I know that in District 15, the demand factor is always strong. If you buy the right unit layout and size, right?
Yes, indeed.
Okay, let's go
Okay,
on to Toa
great.
Payoh, your favorite place. We grew up in Toa Payoh.
Wow,
as primary school friends.
Yeah.
So now Toa Payoh at 2008 per square foot.
Wow. Interesting. I think this
Your
is somewhere
favorite
demand will
gem.
be high.
Yeah.
Every people want to
100%
buy
rare
here.
plot. Right,
Yeah,
maybe
rare
the only
plot.
one left.
Yeah, and they love the location. Location is great. There's the PSF doesn't justify location. I guess there are better products out there in the market.
For investment.
For investments.
But for own stay, of course, you can consider wherever you want to consider, right?
Yep.
Okay, let's talk about the core central region. Just yesterday, I was with a developer team, and then they were just talking a little bit more about the QC timeline hitting. I was like, that's exciting for our investors.
Yes,
he said,
it is.
please do not say that live. I said, okay, I wouldn't see which developer. But let's talk about this, right? CCR. We are seeing Marina Gardens side finally coming up soon. Marina Gardens Lane.
Yes.
Right, let's talk a little bit more about this.
So this is one of the plots after Marina View site that will be launching end of this year.
Yeah.
So Kingsford by itself, the break even is about 2361 plus area harmonization plus the fact that this is actually a white plot, white site. Which white site means there's actually more cost to build in terms of the commercial side, and also in terms
amenities
of
as well.
amenities and near to the sea also, the cost of building is actually much higher. So in terms of the break even margin, they have to sell closer to 3,000 get to 3,1 per square feet,
which I think is fair. At 3,000 per square feet in District 1, I think it's very fair.
Yes,
right?
indeed.
Yeah. But I heard that there are news that there are some plots there that wants to go at 4,000 to 4,003.
Yes, that's something that the developer have been taking some time to launch. And it is something that, wow, if it's were to launch at that price and it lux and they sell the whole idea
Of
and
luxury,
that's luxury,
opulence.
opulence, and really need a certain group of buyers to actually buy into that.
Yeah.
But the key thing over here is they'll maybe play on the the PSA high but quantum lower, and also play on the lux kind of the idea.
Yeah.
To want to sell to a certain group of buyers.
Yeah.
Yeah.
And that's also, as much as we are always talking about like, you know, Cassia being like the freehold, the cheapest freehold and stuff, which is the normal marketing that what everybody is talking about, it makes Cassia an attractive option amongst all of these future land bases coming up. But of course, Cassia, I think our brokers, those who have bought Cassia or our brokers who have bought Cassia, they know exactly which unit to buy and which layout to buy. It has already been discussed, so rest assured. But for individuals who rush into it, holding on to the fact that it's the cheapest freehold, I think there's going to be a bit of the miss lah. Okay, so I'm going to ask you one last question before we do our conclusion slide. Okay, but there's another few more new supply that's coming out at Zion Road, and Holland Drive.
Yeah, it's a new supply to observe, which is quite exciting because these are some plots that if the price is actually priced right, it may be one of the choices. But however, of course, in market cycle, this is something that we cannot never predict.
Yeah.
Because it's still in the midst of bidding.
Yeah.
If they bid at a much higher price, they will miss opportunity. But these are the supplies that, in general, it is moving in progress towards a low interest rate environment when it end by next year.
Yeah.
So there's some things that if they were to price it in the wrong price, it may set a new benchmark in terms of CCR prices.
Yeah.
So that's when we observe if there are inventory in the market, there's worth considering in places where the price set right.
Yeah.
We do see opportunities in those projects.
Yeah.
And that's when we enter.
Yeah, and specifically in the core central region market, we are already seeing that on-block pricing is already hitting above 3,005 to 3,008 per square foot. So it's a new pricing that you got to accept lah if you want to go into CCR, right?
Yes, indeed.
Okay, I'm going to ask a very simple question for our viewers out there. Thank you for all of you guys who are still there. If you have any question, right, you can just key in. There's close to 100 of you guys now. Any questions, put it inside. I hope that we have time to answer, but I really think we don't because we wanted to keep it within 1 hour because a lot of people are complaining it's too long. We still have last segment to go. After this, our bonus segment. So stay with us for a while. But before this end, I want to ask you a question. So, current launches versus future launches in the market.
Yes.
As an investor, would you consider current or future? You don't have to say which future. You just have to say
future?
current or future.
Honestly, current, there's two of them. That-
Future?
Future, maybe one.
Yes. So
Yes.
current, in my opinion, I think there's two very worthy plots that you can take note of. Developers are still very realistic with the pricing.
Yep.
I think there's going to be some upcoming supply coming up that's going to excite them a bit more.
Yes.
Future, definitely only one.
Yep.
Definitely only one. Yeah. Just laughing at investment there. I think once we clear the development, that's it already lah.
Yes,
No
indeed.
lah, but there's a few on blocks that's coming out with PSF, of course, still inching upwards of 2,000 plus per square foot lah. So we have to accept that this is the new price. Okay.
Yes.
And okay, so current two, future one. Okay. Which is it? Ask your brokers or scan the QR code and then you can ask us. You know, we can't share this kind of opinions live like this lah. I hope you understand. Okay.
Yes,
so
it
let's talk a little bit more about our final conclusion.
Yep.
So Q3 updates, we see numbers, we see supply, we see harmonization.
Yes.
So what is the melody that we have to sing now? What is the final conclusion of our quarter 3 update?
All right. So the whole presentation
Yeah.
we summarize in this 5 main conclusion.
Yeah.
Okay, first one is looking forward, higher N1 money supply, low interest rates is showing signs of market recovery.
Which also means that prices are increasing.
Increasing.
And it may not be beneficial to investors.
Yes. All right. So this is something that is bound to happen.
Okay.
It will happen.
Okay.
And second trend we're seeing is that resale condo prices in certain areas have climbed closer to new launch prices.
Yes.
And they're going up in tandem
Yes.
in the past 3 to 4 years.
Yes.
Right? And another opportunity that we notice is that huge split resale condominium in certain region have climbed closer to resale landed. Okay, so this is some things that we notice in terms of the price trend that present opportunity to enter.
Yeah.
Okay, the fourth thing that we notice is the gap between the CCR, RCR, OCR condo price narrowing. Okay, but of course, in terms of opportunity wise, only certain areas can be considered.
Yeah.
So this is something that we are still in touch of it and looking forward to see how this price will play out.
Yeah.
Okay, and last but not least, we see that the landed prices are out.
Yeah.
So those are the higher prices that we see that it will actually lead to price growth in long-term trend.
Yeah.
And we have been tracing carefully to pick the right ones because not all of them are worth considering.
Absolutely. So if you're on the fence for some time already, right? And we do understand this feeling because not that we are on the fence, but there are a lot of clients who may be on the fence.
Yep.
Let's say if we know that the market is recovering with price coming up, we know that future land bid prices are going to go up. We know that there is no chance for us to get a fire sale because of the household balance sheet. We know that property bubble won't burst. Then actually what are we waiting for? I think waiting for the eradication of our fear, right? Because we have seen so many investors who have moved on 3 years, and they have profited. And fun fact, we have helped a lot realize their profit this year and last year, and they are moving on to the next asset, right?
Yep.
So let me just talk a little bit more about this whole landed dream of Singaporeans, right? In fun fact, if you take a look at the landed growth rate compared to non-landed growth rate, right? In the past years, right? Don't talk about the COVID time, right? Non-landed has actually sometimes outperformed that of landed. So the whole dream of owning a freehold land, it means that you can make money, is actually a myth. It makes money, but not as much as those that is in the private property side, non-landed, right? So why? If let's say today we talk about point 3, right? Huge floor plate resale condo, should you consider that or should you consider landed? Okay, it is really district specific. In some district in the core central region, right, the landed properties, because of the sparse supply, because there's only 1 or 2 roads in this particular area that has landed properties, the bigger floor plates is actually seem to be of more preference. People are willing to pay 11 to 15 million for a bigger floor plate, 2,500 square feet unit. And if you have that affordability, we have seen prices jump up by 5 million even in 3 years, right? So what I'm trying to drive a point across is this, across the point is this, right? Do your best to do market research and understand the market demand before taking action. Don't just jump in and say that landed is the dream, so I'll jump to landed, because after looking at District 19, 10, 9, 15, 20, 21, after seeing all of this landed, which we have the full inventory for in our capital markets team, as well as some of our sales members in JNA Real Estate, out of which maximum, I'll give you 5 that you can seriously consider to make money. The rest, property prices are still on the higher side, right?
Yes, indeed.
So we have just got to make sure that, before you buy, it must really be a dream to stay versus it's just buying something just for investment, right? And both of us at the top, because we could have bought a landed, but we are thinking, should we enter at this price? Which eventually we didn't for now.
Yep.
Right? Of course, if there's a good price, we will enter, okay?
Yes.
This brings us to the last part of the story. Okay, and the last part of the story is just about our story of owning more than $50 million of assets collectively under 30 years old, right? This story is not something that we want to glorify ourselves. That is the last thing we want to do. We want to show you how amazing and how good we are. We know that we are really very blessed and blessed by all your support as well. But what is the reason, what gave us the guts, right? To be stressed over the mortgages that we have to pay as well, but also to be so happy to see that our property prices are appreciating so well, right? So I will just share with you a little bit more of the story of Chris and myself. And then from there, just have a very candid conversation speaking to you about why are we practitioners too, right? And why do we start investing when we are so young? Okay, I think we can go on to the next slide. You will see that based on this slide over here, Chris has been featured before on Asia One, right? Of course, there were so many comments that came out, and there's good comments and hate comments, which is very normal, right? But this man over here has been my childhood best friend for 18 years. This year is the 18th
Wow,
year.
18
yeah,
years.
when we were
Time
10 years
flies.
old. So we grew up in Patron Public School. We went to secondary school together. We went to JC together. He was a scholar. I was in another school. And one thing that we chatted when we were young, since young, was not to make as much money as we can. But hopefully one day we are able to retire because the prices of everything in Singapore is increasing since we were young, right? And this particular newspaper article over here shows that he owns 8 properties, right? Of which I think you offloaded 1.
Yep.
Right? 7 now, right? Trying to
Yes.
offload as much as you can to cash out and realize the profits. And 7 local properties, right?
Yep.
Then, as for myself, right, this is just a short journey of mine. If you haven't seen my journey, back in 2018, I entered into a condominium called Twin View. That was when I was 22 years old. I sold it for close to a profit of 200K. That wasn't the best investment I made, right? But I remember that was a time where that was the only thing I could do.
Yep.
Did I regret? The answer was no, because that helped me in my down payment for a next property, which I'm currently residing in. And may I mention, got it at about 3.8 million. And then currently we just did a bank revaluation at 4.5 something million, right? Which means in a couple of 2 years, I made about $700,000. And then after that, you know, with the investment team help as well, and also with my wife, we decided that, hey, you know, it's time for us to be a proper steward of the wealth that we have so that we can plan for the future. And that's when I entered into a 3-bedroom and rental mansion, right? Which was a 1.93 million unit. Current valuation now is about 2.2 to 2.3 million. Okay, so today we're just going to talk to you. What is the reason what give us the guts to take action? Okay, can I just see, based on all of the responses here, right? Who here has already taken action? Can give me a 1. Okay, and who here is still on the fence of taking action? Can give me a 2. Okay, so those who have taken action, give us a 1. Those who haven't taken action, give us a 2. So that we know whether do we even have to go into that or not. Because if all take action, no need. Okay, Sean, congratulations. Any more? 1 if you have taken action. 2, great. Any more? I'm seeing it because some are sending to me individually. 1, 2, 2, 1. Yeah, okay, let's carry on. Hi, Sean. Congratulations. 1. I see Jerry. Hello. Jasmine, 2. Yeah. Cool. Okay. So looking at what we have, right, based on the rough vote that we have currently now, with most of you all sending through hosts and panelists, right, thank you so much, right, is that it's a 60-40, 60 not taking action and 40 taking action. And I want to trust me on this. We may be talking about our own story about owning 2. In our team, a few of our brokers have already achieved 2 under the age of 35 as well, right? Because we are practitioners ourselves.
Yep.
So maybe Chris, you can share your story. What made you want to own 7? Because people always say buy property very fast, free one. It's not true. We still have to pay the loan. Of course, if got rental can cover, but what if rental cannot cover? What gives you the confidence based on your story, right, in the past, where a family that was burned by real estate give you the confidence to take action and say, you know what, I'm just going to buy. Then I'll share my side of my story, why I decided to buy.
Yeah, so I think my story starts from my parents.
Yeah.
Like, because as I mentioned just now, it was so ill-advised by agent to over-leverage, to buy into properties that is way beyond their budget. And they actually upgraded from this Toa Payoh HDB into a condo. But before selling HDB, they actually told them to buy the condominium and hold 2 at one time and buy 1 more in the same development.
Yeah.
And what caused the problem is because it wasn't planned financially, wasn't done well. So in the end, they had to sell 1 condo and 1 HDB.
Because of
over-leveraging.
Yeah.
And it's like they were really borrowing credit card to finance the loan. So it was really, very bad. And because of that, my dad actually went into a lot of financial troubles and it actually triggered down to money problems that caused my whole family to go into chaos. And that's something that when I still remember the time when I saw my dad struggling, and in the end, we even had to sell off the last condominium to pay off certain amount of financial obligations that had transit to downgrading back to a 3-room HDB.
Yeah.
And during that time, that 3-room HDB, I still remember, it was an Ang Mo Kio. Lease left maybe about 50-something years, 60 years.
I went to when I was young?
Yes, that's the one.
Wow.
Very
It's nice.
very nice. It's a very nice home. I love the home. I love the home. Just that in the next almost 2010 to 2018, 2019, we see that the price actually depreciated over time. And it went up a bit later on, like you see in the trend just now, but it actually ended up negative still.
Yeah.
And I realized how important it is to know about real estate investment knowledge, because I realized an agent who you advise others in the wrong way may actually lead to a destruction of family.
Yeah.
And it caused a lot of hurt when I was growing up. I see them. It's always a lot of stress.
And I record that your father loved you a lot, right?
Yes.
You're talking about the pocket money he giving you, even though he was already in financial distress. Yeah.
And even he didn't tell me at all. And I only found out when I was graduating from my JC, junior college, and when my father called the room and mentioned to him about the situation, then I realized that something had to change in the family. And my parents love me so much. And that's something that motivates me to say, what can I do to make this change?
Yeah.
What can I do to make this difference in this particular situation?
Yeah.
And that was when real estate itself, I realized no longer just about, like buy, sell,
Yeah.
this transaction, just okay.
Or just stay.
Yeah. But rather
That's
it's
it's way above that, right? Yeah.
And that was when confidence came in when I attended a lot of courses about real estate investment, learning from mentors how to invest in real estate in general, and going down to the ground to really understand what exactly is the right way to invest in property.
Yeah.
And subsequently seeing success story of how this can be done.
Yeah.
And after data, numbers crunching, I realized this is the part that actually changed my life.
Yeah.
Where whatever that I earned from real estate, I realized I put it back to real estate.
Yeah.
I'm not someone who want to spend on luxury and stuff. And that was a period when I realized these savings actually allow my parents to retire today.
Because of the real estate asset that you bought with the positive cash flow.
Yes.
Yeah.
And that's when I focused on high passive income, commercial and residential.
Yes.
And that was when my parents right now, with their own property that was settled, in fact, just very recently, that it allows them to truly retire.
For peace of mind as well.
Yeah.
And finally have a shelter that they can call home.
Yes.
Which is amazing, right? If you think that his story is amazing, can you give it a 3? Right? I think it's so amazing because I've seen his journey, right, throughout his entire life. I think that's amazing. So then just ask a question. Thank you so much for replying, right? Let me ask you a question. Let's say today you don't have the situation that your family's in, which I believe that, God sent us this kind of situation so you can learn. And because of that, that's why you can be an amazing real estate investor, right? Without that, maybe you are a scholar in MOA now becoming a principal, okay? Let's say today you don't have that problem of having to fend or feed your family, right? Would you enter in a high passive income asset or would you go into high capital appreciation asset? Knowing that passive income, if you go in, firstly, is rare. Number 2, of course, you know the yield, right?
Yes. Which one
would you have gone for?
I'll go into capital appreciation.
The reason behind that?
And the reason behind that is because if I'm not in a state where financial is an issue, where passive income is something to support my parents, but because age and become grow more, what will happen next is that the amount of capital appreciation you can do per cycle will definitely outweigh that of the passive income you get in the short term run. And there's something that in the long term run where my parents are right now to retire them, it transiting into a defensive strategy. So there's something that in fact most of the property that I look at that appreciate over time is all purely for capital appreciation. And it's something that actually earns much more as compared to that of the passive income.
But you have to do that for survivability.
Yes, right? Correct. And short-term pain in terms of going through the next 10 years, paying out a mortgage, of course, not over-leveraging, keeping it in the right way as compared to a purely passive income flow. It allows the speed up of this capital accumulation, which subsequently allows you to transit to a defensive portfolio much easier and transiting towards a capital preservation and
retirement.
Free cash flow kind of retirement.
I actually haven't shared the story of why I wanted to invest in real estate.
Yeah, share more.
No, I've never shared this story live before, but since you guys are here, and I don't think this will be posted, I will share with you what's the reason why I decided to go into real estate, right? I think for those who don't know, I did law and business in SMU. I wanted to be, my grandma's dying wish for me was to be a lawyer. 所以整个 family 里面没有律师，我的 dream 是做一个律师，你可以帮我做一个律师。And it was so tough to be in real estate. But of course, real estate became a mission and a calling for me. So many fun things that we're doing, and that's the reason why I came in. But the biggest reason why I decided to do real estate or invest in real estate is because of this, right? I remember there was one time I was calculating how much I need every month to comfortably retire. Okay, assuming, let's say I give my wife a good life and my kids a good life, right? Let's assume a 10K per month passive. It's not a lot, but it's also not little. It's still okay, right? Assuming 10K per month times 12, I need 120K a year earned from passive income, right? And assuming a 4% yield, right, which is fair, I need around $2.8 to $3 million fully paid property to earn that kind of money. Then I ask myself, how to get the $3 million cash to retire eventually? Because it's what jobs pay you $3 million, $1 million, or $500K? Not hard, right? So I decided that, okay, I need to find a quicker way to make that money so that I can work smart for retirement. And when I thought about that, after entering real estate, I saw that there were so many investors that lost money. There were also a lot of investors who made very good money. And some of them, after 3 to 4 flips in the bigger asset, they are able to have the amount of money that I want to retire already. So that made me think that today, if I'm a real estate owner, do I want to just say that this real estate asset is an asset for me to stay? Or do I want this asset knowing that if I'm staying in it, I know that when I'm sleeping, someone is paying for my property tax, someone is paying for a maintenance fee, someone is paying for the interest I'm paying. Because after 3 years of staying inside, I know that I've made enough money to cover all of these things, which means I stay kind of rent-free.
Yep.
And I decided that I need to go deep into the numbers to be able to buy something that can make me money as I'm staying. That's
Yes.
one. Number two, in Singapore, one thing I learned is that money is not a rare commodity. Because a lot of people in Singapore, they are rich. But the name is a rare commodity. Today, if I have 4 kids and I got a lot of money, I can buy 4 properties there because no need to pay ABSD. Of course, I have to pay trust, right? For the ABSD for trust. But I see there's a remission. But let's say me and my wife, which is Penny only, I have 2 names to play and I need to reduce the amount of opportunity cost to play the property right. And that's the reason why I realized that as I get older, let's say I cross 35, my loan tenure is going to drop. Which means that my affordability, my property is going to drop. And we know that as the quantum of the property drops, the amount of profits I earn is going to drop also. So how then do I use other people's money through my own real estate investment because I've done the data, the research, I've gone for summits, I've gone for webinars to invest in something such that my asset can get bigger and bigger and I can flip for higher and higher profits. So that made me realize one thing. As the whole world is searching for the best asset to invest in, there's never the best because we are not God. We will never know what is the best asset. I heard of gurus before.
Yes.
This is the best. Now so many people of the gurus coming and ask us to sell at a loss, right? I've also heard people say, I'm not too confident. En bloc, they make good money.
Yep.
All I know is that since my opportunity cost is my time, when I have a free name, I better take action. And whatever is the best action at the moment, I will take action. And that's the reason why when Penny's name was free and we had saved enough, we entered immediately without hesitation into another unit. Yes, maybe if I chose something else, I've made double the profits, but at least I make some money. And that's what's most important for me. So every 3 years, I become this whole, maybe you can show a slide of what we are going towards, right? This is something that we have crafted out for ourselves, not just for our investors, right? That at 20 to 30, we need to go for a high quality offensive play. Capital appreciation. You know, don't go bullish until you cannot afford, but better focus on capital appreciation. We are not of the age that we should rent property unless we are, of course, in a dire situation to have passive income to cover our lifestyle because that makes us lazy, that makes us comfortable, and eventually we will retire early and realize that, oh shit, we have not enough money to retire later on. And then we have forced labor, right? And at 30 to 40, when you're getting married, like the stage that we are at now, planning for kids, it is so important to have a home. Because sometimes money cannot pay the amount of bliss and happiness you give your wife or your kids a good home. And that's why one name will be for a good home while making money. So don't anyhow buy that and say, okay, this is my dream home and you buy sky high price. And the other name free up to flip. And then as you capital accumulate and as you use other people's money, which is the OPM method, you are then able to reinvest into high yield assets, whether you want to buy your bonds, your stocks, your private equities, anything, or even through real estate, to then safely retire by the age of 50 or 60. Of course, we cannot number the days. We don't know how many days we have on earth. But one thing we can do is to do our best. So I sense that there are a lot of people now who are fearful. But fun fact, I want to let you know, I would like to let you know that you are not the only one, but I can be very open to you. In the market, everybody's taking action. Maybe 3 years back, you asked me, am I the only one? I say no. But now you ask me, are you the only one? I say potentially. Because a lot of people are taking action, but maybe they don't have enough money to take action. Of course.
Yes.
Number one, affordability is key. Number two, if you invest until you cannot sleep, you should not even invest. Because your whole mental health, wellness and happiness is important.
Yes.
But if you can invest, you also secretly know that after you put the money, you still have money. Even though you have to liquidate your stocks and stuff just for more savings, you know you can take the action, just take the action. Yes. Some of us may have made not so good investment purchases in the past. Hey, we have been through that before, right? But the key is to move forward and make money through other people's money through investments non-stop, right? That is my key. So this is the reason why I decided to invest. And then slowly as our asset increase in a value, then we grew more and more in our portfolio. You know, Chris and I, we had a goal, and I'm going to share with this goal that we have. As a childhood best friend, and in order to be a good steward of wealth, we gave ourselves a goal that by 2030, we hope to own 20 properties in total, right? Whether is it going to be local or whether it's going to be overseas, but in order to encourage more and more investors to be able to take action without fear. Right, and change that through real estate investments, right? So what are we working so hard for, right? Not to hot that 20, but show you that it's possible because both of us didn't come from like super privileged and rich family, and through real estate investments, we can do it.
And build a church. Yeah, for me, is like this wealth that I have is, can I use it to bless people? Can I use it to create more value in this world? Because for example, even like for church building and things, like, am I able to use this particular thing that we have to be able to validate in people's life? And there's some things that we hope not just to inspire, but at the same time using these resources to bless and to create more value. And that's something that have been keeping me awake every single day, because currently in terms of the community that I'm in, the people that I have, the next direction in our business, I found out that the amount of money that come in is never enough. It's always never enough for bringing your own happiness. But what really creates that joy is seeing how this wealth this passed on to us is able to be stewarded in the right way, such that people can be blessed.
Yeah.
And this itself gives us the greatest joy.
Yeah.
And for me, it's something that is very, very precious.
Yeah.
And seeing how God can work through all these things to impact people's life.
I think one of the reasons why we started the whole real estate investments team, the JNA investments team, was because we realized that in Singapore, as the cost of living is going up, a lot of people are quarreling because of money. A lot of people are fearful because they're scared that they cannot afford. And we also have the same fear eventually. What if things get too expensive, right?
Yep.
I think all Singaporeans will have that same mentality. But then with the pursuit of chasing money non-stop, right? What will happen is that we realize that a lot of people lose track on the ultimate things in life, whether it's their fitness, their health, which I have been through that before, right? Or their family, right? And at the expense of the family, they went to go and chiong and they hoard wealth. I want to share with you this. Hope that none of you guys are super ultra high net worth. I've seen ultra high net worth who are super happy, but 90% of ultra high net worth that I've seen, they are actually not very happy. Right? So it shows that money is not everything. But is there a smarter way to make money through our investments? The answer is yes. So that we can free up more time to be able to spend time with things that truly matter. And this is why we do what we do on a Wednesday night. Okay?
Yes,
Thank you so
indeed.
much for watching this Investment Summit. If you have any questions, you can just WhatsApp us. But remember, if you have a broker that recommend you, please go back to your broker. Join our Telegram community. I'm so proud of us because today we took about 1 hour and 40 minutes.
Wow,
The previous
record.
time was 3 hours. This is a personal best for us. But thank you so much for watching this Investment Summit. And you know what? The Q3 Investment Summit will come real soon in a couple of months' time. Follow our content. Reach out to us if you need help. If you need a new launch guide, talk to your guys. But we love all of you. Be blessed. Don't just mindlessly chase money. Money is not every single thing. But there's always a smarter way to make money, okay, through investments. All right? This is Jarvis.
This is Christian.
And we'll see you for the next Investment Summit. Bye-bye.
Bye.